Despite growing fears of an AI bubble and geopolitical and global geopolitical unrest, Nvidia, ticker NVDA's tangible revenue and absolute market dominance make the tech giant a critical haven for investors, despite the ongoing fears of a software stock rout. And that is according to Constellation Research CEO Ray Wang. As analysts debate potential market downturns, Wang insists that the demand driving Nvidia is physical and undeniable. Quote, all these SaaS apocalypse, AI apocalypse scenarios are basically being relooked at, end quote. Wang told this to Schwab Network, pointing out that Nvidia's growth is rooted in concrete infrastructure development from new data centers to energy plants. With year-over-year increases hovering near 80%, Wang highlighted that Nvidia is not running on empty promises. Quote, these aren't made-up numbers. They're real revenues, end quote. He cited projections of $1 trillion in sales from its Blackwell and Vera Rubin architectures for 2027. Amidst global instability, Wang predicts a market reset where investors will view tech as a flight back to safety, noting it remains the primary unregulated growth driver in the market today. Further insulating Nvidia from a software rout is the impending boom of sovereign AI, which Wang stressed represents a massive untapped market. Quote, every country now wants to have their own AI so they can get the skills that companies in their country are protected. It came from CEO Wang. As nations scramble to safeguard their cultures and data, Nvidia's unique positioning as a one-stop shop controlling 80% of the AI data center market and everything from compute data pathways to token access cements its role as the foundational architect of global AI infrastructure. However, the ongoing AI boom faces strict physical constraints tied to geopolitical tensions. Wang warned that traders are currently betting on a short-term disruption regarding the Iran conflict. A prolonged situation threatens severe supply chain bottlenecks. And indeed, that's what we see here, that's what we see here from everyone, even varying the different opinions. Quote, if the Iran war continues for 3 months, we're going to run out of sulfuric acid, end quote. Wang cautioned that, highlighting the critical chemical needed to etch chips. With components struggling to pass through the Strait of Hormuz, a drawn-out conflict could temporarily stall production, even as long-term global demand remains completely intact. So, SaaS apocalypse, I think that was totally overblown. I think there are going to be some really good opportunities. And again, this whole move down in the market, right? The whole wanting the move down in the market is so that we can add some of these super quality companies at lower prices. And make some money off of that.